whatever is being taught. Come and guide and be with us. In Jesus' name I've prayed. Amen.
Amen. Thank you. So we are putting
Amen.
this course
Amen.
in the hands of the Father, and by him we'll be able to achieve our aims and objective. So we pray that everything that we are going to put into practice, we are going to have a retentive memory, and it will be easily understood by every one of us. Then by the time we are going to write the examination, God should just give us the wisdom to be able to attempt the exact requirements by the examiner. At the end of the period, we need to come back to God and give all glory and praises to Almighty God. So shall it be in the name of the Lord. Amen. My name is Olatunji Wahab. I am one of the facilitators in financial management, also strategic financial management. So this course is not a new course per se. We have gone through this course in our various academics. And also in ICAN, it is not also a new course per se, but just that the syllabus was changed and it is now being introduced at your stage. What we are going to be doing at this level now is what you are supposed to come and meet at the final stage. But now, the examiner stated that what you are going to be meeting at final stage will be too much. That is part of the reason why the failure rate on strategic financial management at the final stage keep on increasing. So they look at the syllabus so voluminous with strategic topics. So that is why this is being divided into two parts. Some part is being brought to the skills level, while the remaining part will be attended to at the final stage. So it is not a new thing. Now, because of this latest development, the majority of the topic that was brought from the final level to the skills level, we still have some other topics that is added to the skills level syllabus. And in view of all this, as we are currently, ICAN is yet to provide a study material. But that is part of our own responsibility to make sure that we put you through all it takes to have an understanding of the syllabus, study all the requirements in the syllabus, and also to give you a guide on how to pass your examination. So with this, our normal procedure is that we will have made a summary note or a comprehensive note before we even commence the class at all. We will have shared this to the group generally. But because of some topics that we still need to bring on board, so we are unable to have the comprehensive notes as we are. But we are updating it, and we promise before the middle of the diet, or maximum 1 month, we are going to update fully the studied notes, a summarized one that we are going to share with you. But today, the number one topic that we are going to treat, I have made a note on that, so which we are going to use. Then I will share the note to us on the WhatsApp group. So my name once again is Olatunji Wahab. I am popularly known or called or identified as Success.
Success. You're welcome, sir.
Thank you. So as I was saying earlier, I stated that one of our rules and regulation, which I am so impressed that as we are joining, majority of us are abiding by it, even before we introduce you to those do's and don'ts. One out of it is that as you are joining, we will need you to mute your mic. You know the essence of muting your mic so that we will not be having background distractions. And if you have any question to ask, you are free to put up your hand. You will be recognized and your question will be attended to. You are free to also put your hand up if you did not understand a particular item being explained. You are free to put up your hand and ask for what? Further explanation. That is one. Two, please try as much as possible not to miss any of our classes. Try as much as possible not to do what? Not to miss any of the classes. That's number two. Is it possible for us not to miss any of the classes? Yes, that is possible. One is that you must be available for the real-time class as we are having it now, so that you will participate. As you are participating, you gain more knowledge. Immediately, if you have anything that you need to know better, you are free to ask the question why the class is what? Real time. So that is one of the benefits for you not to do what? Not to miss the class at all. Or based on one thing or the other, you have a pressing matter to attend to. Because of that, you are unable to attend the class. This class is being recorded. As we are speaking, I have started the recording right from when we start the opening prayer so that nothing will be missed out. So if you miss the real-time class, please try as much as possible before the next class to do what? To go and review what we have studied that you miss real time. And the essence of that is that we need to all be on the same page so that the next time that we are coming to class, we don't want a situation whereby somebody will be dragging us back on what we have discussed earlier or what we have solved earlier. I believe we are following.
Yes, sir.
Yes, sir.
All right. Then.
Yes, sir. We are with you.
All right. Okay. Then, being the first week and second week, I will even prefer that we start with the theoretical aspect of the syllabus. Not because of anything, just because, one, we still have some of us that are, even as we are speaking, somebody is just joining now. Then by the second week, we are going to start fully with what? With calculation, and we don't need to miss out, or we don't need to be dragging ourselves back. Then we have informed the admin for anybody that will be joining in between so that this class will be a continuous one. We advise that they should go and watch the recorded video from the previous classes to be up to date so that they can meet up with the class. So please, let us follow these little rules and regulation. Then as the class is ongoing, every tips that you need to pass this examination easily, we are going to be bringing it on board. Lastly, before we now start on this course, please, your writing material is 100% important to me. Your writing material is what? 100% important to me. So if it is 100% important to me, so definitely it must be 1000% important to you. And what are these writing material? You will need your notes. Please don't combine your FR notes with your FM notes. Don't combine your PM notes with your FM notes. Have separate notes for each courses. Have separate notes for each courses. So that is one, your writing notes. Then secondly, your functional calculator. Functional calculator. And I need all this before we even commence any calculation at all. I need your functional calculator. Do you know why I'm telling us that you need what? Functional calculator. Some of us will not even get that calculator until when it is 1 week before the exam that we'll be looking for one calculator. And the calculator that you have not been putting into practice, into use, and you just buy it a week before your examination can fuck up on the examination day. So if there will be any error on that calculator that you are starting to use by this period, you will have identified that this calculator will give you problem. So that means you have to change it. If it is battery issue, you have to change it. Or if the calculator is outdated, you have to go and get the updated calculator. So you need what? Functional calculator. So all these are the do's and don'ts that I'm having for us for now. So let us go into the business in proper. I believe we are all together.
Yes.
Sir.
Yes, sir.
All right.
Yes,
Peter.
sir.
Peter,
So
your hand
you
is
talk
up.
of you talk of functional calculator. Sorry,
Yes,
which
sir.
one do you think is the best that we can use?
Casio, minimum Casio calculator is okay. You may not need the 100% scientific calculator. Or
All right.
let me say it this way. Do you know that WAEC calculator? That
Yes.
student WAEC calculator is
Yeah.
100% okay for this exam.
All right. Thank you.
All right. Okay, let us move on to the business of the day. I hope you can all see my screen.
Yes, sir.
Yes, sir, we
Yes.
can see.
Okay,
Yes, sir, we can see. Yes, sir, we can see.
thank you. Now, this is the course outline. On the course outline, we have 15 chapters. And I believe if ICAN is to release their course outline, the course outline may be up to 26 or 28. I will tell you one of the reasons. Look at chapter 2. We have investment appraisal techniques. Investment appraisal techniques has subtopics which can be divided into 3 or 4 subtopics. But I simplify everything. Investment appraisal is investment appraisal, but we are going to treat every details that we need to touch under each topic. So I brought out everything, and this is according to the prescribed syllabus given to us, and we will not leave anything untouched. Sorry, I also need to introduce you to my colleague. I'm having 2 other colleagues that will be joining us in this course. The second person is Mr. Amos Uwem. Mr. Amos Uwem. Then he will be the one that will be taking some portion, most especially financial market and treasury functions, or everything relating to risk management. Everything relating to risk management. That is Mr. Uwem. And again, I have Mr. Inyada Wasiu. Majority of us will have known him before now. He was the one in charge of maybe CSME or some topics, some courses at the foundation level. So you will also be joining me for this financial management course. So let us look at the course outline. Chapter 1, we have the financial management function, which is what we are going to discuss today. Somebody hand is up. Bayo.
Yes, sir. Good afternoon, sir.
You are welcome.
Yes, sir. Please, sir, I need your assistance by requesting that the 15 course outline you just mentioned now, if it can be posted to the WhatsApp group.
I will share
this
slide. I'm going to share it with you immediately after this class.
We continue the 15 course outline. Okay, thank you, sir.
It will contain everything. It will contain everything.
Sir. Thank you, sir. Thank you, sir.
You are welcome. Sir. All right. And somebody is serving challenge to join. Okay. I have forgotten when we were carrying out orientation yesterday that this is part of what we're supposed to discuss on for those that have not been using team to join a meeting before on how to make use of the team. Oh, the person should just try using ID and passcode. Motunde, thank you. That calculator is the type that I'm referring to. So somebody should assist to guide those that are finding it difficult to join in. So somebody should assist. All right. So the first topic that we are going to treat today is the financial management function. After that, the second one, we have investment appraisal techniques, followed by asset investment decisions and capital rationing. The next one is investment appraisal under uncertainty. Under uncertainty. We have working capital management. That is topic 5. Topic 6, we have sources of finance. In fact, if you see the joy in splitting FM out of SFM, when you just come to the final level, it will just be as if you come to play at the final level because you will have minimal calculation to touch at that final stage. Sources of finance. We have dividend policy, the cost of capital, capital structure. We have financial ratios, business valuations, and market efficiency. Chapter 12, we have the economic environment for business. Chapter 13, we'll be looking at financial markets and the treasury function. Second to the last, we have foreign exchange risks. And lastly, we have interest rate risks. So these are the topics that we are going to be taking for financial management. So another thing that we will need to put in place is that on these topics that we are talking about, we are not new to them. That is one thing. But maybe it has been a long time that we have laid our hand on most of these topics. Okay, please, I'm coming. I can see your hand up. Kazim, hold on. So the way we are going to be treating this, but as promised, that we are going to share you the fully updated material. So as we are treating one topic today, once we conclude it, we are going to announce the next topic that we are going to treat so that you can just go and make a glance through on it to give us better advantage before we go on to the next topic. Kazim, your hand is up.
Sure. Does this include the lectures of the other lecturers, please? The topics?
Yes, it includes the lecture of other lecturers.
All right, thank you.
Yes, it's for all. This for all we need to note in financial management. Oroma.
Yes, sir. Can you hear me, sir?
Yes, we can.
Okay, sir, you made mention of you introducing another topic when once we are done concluding one topic, and you saying that would go to glance through before coming, but you also mentioned that we don't have a note yet. So what are we going to use to glance through?
Okay. What we are going to do, we try as much as possible, as I promised earlier, that we make the material available as soon as possible, even when ICAN has not even provided one. But we are going to give you what you are going to use as soon as possible. But aside from that, you may be in your previous academics, you're having some of these topics that you have treated before we sharing you the material. So you can just look through it just to have a little knowledge about it before we move. That's my explanation. Is that clear, Oroma?
All right. Yes,
All
sir.
right. You can lower your hand. Oluwakemi, last question. We have not started. Question is more than study. Oluwakemi.
Good evening, sir.
I understand. This FM is a new course to us. It's a new course. So Oluwakemi.
Okay, can you hear me, sir? Good evening,
Yes,
sir.
we can hear you.
You mentioned that most of these topics are from SFM. So is it advisable to download SFM Pathfinder and also
not okay. SFM Pathfinders.
Yes.
To some, but not all. To some topics there. Because I mentioned that there are some topics that they are not even in SFM at all. Okay. There are some topics that are not in SFM at all. One out of it is working capital management. We have capital rationing, investment appraisal under uncertainty. So we have capital structure in SFM, but that will still assist. But before you can start solving question on Pathfinder, you have to know the specific topics that you need to have the knowledge. Yeah, it will also help. The SFM material will also help.
Okay, thank you, sir.
It will help. All right. So let's go for the first topic of the diet. The financial management function. Please, another thing that I remember now. Yesterday, one of the tutor was giving us hints or clue on how exam is being graded, whereby maybe it is being divided into 4 segments. The first segment, let me make use of an FM as a case. FM is divided into 6 segments. The first segment is financial management function and environment. The second segment is working capital management. The third segment is investment appraisal. The fourth segment is business finance. The fifth one is business valuation. And the last one is risk management. The last one is risk management. So as these topics were being divided into these 6 segments, what we need to take notes out of it is that there is none out of these segments that are not relevant. All the segments are relevant. And that is some of the mistakes that some students usually face. What, by doing what? By ignoring the theoretical aspect of the syllabus and focus solely on the calculations. No, the exam is not designed only for calculation. Majority of people, when they are coming to final stage, SFM is the problem. ISFM, calculation, no. No. So that shouldn't be the orientation. Please, all the segments are important. And if you go by the syllabus, just go and look at the segment that I mentioned. The percentage of each segment, that is minimum, question will come out in all these segments. If not one, you are going to see 2 questions. But it may not be a full question. It can just be bit by bit question that will be picked from each segment. So don't say because this one is a theory, I don't need it. So as you are paying much attention to the calculation, you also need to pay more attention to the theory aspect of the syllabus. So the financial management function. So what and what do we need to learn under this financial management function? 1, we have to explain the nature and the purpose of financial management. The nature and purpose of financial management. We have to distinguish between financial management and management accounting. What is the relationship between financial management with what? Management accounting. We have to identify and describe a variety of financial objectives, including shareholders, wealth maximization, profit maximization, earnings per share growth, or growth in EPS. Growth in EPS. We need to identify stakeholders. Who are stakeholders? Objectives of different stakeholders and their possible conflicts. We have different types of stakeholders and they have what? Different objectives, different aims, different objectives, different goals. So we have to identify all this. We need to discuss on the impact of not-for-profit status on financial and other objectives. Also, we need to know about the nature and importance of value for money as an objective in not-for-profit organizations. And lastly, we are going to discuss ways of measuring the achievement of objectives in not-for-profit organizations. For those that are coming from foundation, please, at this stage, there is no objective questions. There is no subjective questions, and the pure aspect of this level is theory or practical. It's theory and practical. There is no objective question. So the exam is divided into 3 sections. Section A, compulsory question with mark 30 marks. Section B, we have 3 questions, 20 marks each. And you have to attempt 2 out of these 3 questions in section B. Section C, we have 3 questions as well. You have to attempt 2 and 15 marks each, totaling 100 mark. And the pass mark is what? Is still the same thing as 50 points. Once you have 50, you are good to go. But I need a prize winner in my class. So let's go. Financial management. So when I need us to contribute, I will make the request. Then I will need hands up so that I will be able to identify who I need to speak. Whoever that I need to speak, I will need you to identify yourself by putting up your hand, because financial management should also be an interactive course. for better understanding. Everything we are going to be discussing here are what we are used to on a daily routine, or most of what we are doing in our various places of work. Now, what do we call financial management? Financial management is concerned with the efficient acquisition and deployment of both short and long-term financial resources. Originally, when we talk about financial, anything relating to financial or anything relating to economy, one out of the quality of financing or economy is what? Is scarce, limited resources. Limited resources. So in definition of your financial management, we are referring to what? To a limited financial resources. How to utilize the limited financial resources in order to achieve long-term objective. Financial management is concerned with the efficient acquisition and deployment of both short and long-term financial resources. To do what? To ensure the objectives of the enterprise are achieved. And an organization will be set up. Before an organization can be set up, there are resources that will be needed, and there are procedures to be followed. One out of the procedure to be followed in establishing an enterprise is that you need to have an idea of what? Of what to do. That's one. And from the idea of what to do, we call it what? Investment decision. That is idea of establishing an enterprises. With that idea that you are having to establish an enterprises, you cannot just establish such. You cannot bring it to pass without what? Without financial resources. And that will now relate to what? The scarcity of finance. And that is what is referred to sources of financing, that your investment idea. Then that's your investment idea. You're having a goal, objective from that investment decision that you want to take. You're having a goal. This is what you want to achieve. Although generally we have corporate objective of a business enterprise, which is to do what? Is to maximize profit. Is to maximize profit, minimize cost and maximize profit. And lastly, when you have developed an idea of what to do, what you need to achieve, you need the resources to establish such, which is what? Your short-term and what? Long-term financial resources to ensure objective of the enterprise are achieved. And the main objective of an enterprise is to what? Maximize profit, is to maximize profit. And when you now maximize profit, then the last decision will now be to do what? How to divide or how to share that profit, and which will come from what? Dividend policy. Don't worry, all this we are going to expatiate better on it. So we said financial management is concerned with what? The efficient acquisition and development of what? Of both short and long-term financial resources to ensure the objectives of an enterprise or the objective of the enterprise are achieved. A long-term goal. Decision must be taken in 3 key areas in financial management. You have to take decision in 3 key areas. The first decision is what is referred to as investment decision, followed by financing decision or finance decision. And thirdly, we have dividend decision. In my explanation, I have given a little introduction to these three key decisions. Investment. Investment is an opportunity, an idea to create, innovate in order to establish a motive. Then from there, you now look at what type of investment will be profitable or will be viable. So that is investment decision. After you have achieved that goal, you have known what to establish upon. You cannot carry out your establishment without finance. You need finance. Then, after you have seen what you can do, you have actualized the goal, you have seen the process to be taken. Then, what is the source of finance? How am I going to get funds to carry on that investment? That is where you now look at sources of financing. Is it debt financing or equity financing? And lastly, dividend policy. When you have make your profits, sorry, you have financed the investment, and the investment actually came out with what? With positive results, because you will have done your own investment appraisal techniques manually before you start up the operation. Then you have made your profit at the end of the period. Then the next thing for you to look into is the profit. How are you going to go about it? Then from there, you now look at those that make provision for finance, debt financing, the bank borrow you money, the shareholders that bought shares and bring money into the business for you to establish such business. What will be the portion that you are going to give them back? And what will now be the portion that you are going to retain as the owner of the business? So these are the three key decisions. And take notes. Everything we want to do, everything, I said it, quote and unquote, everything we want to do in financial management, they lie under these three decisions: investment, financing, and dividend. There is nothing we want to do. And they all cover all the topics that we're having at the top from the course outline. Everything covers this. This investment decision, financing decision, and dividend decision cover everything we want to discuss or everything we want to calculate from that course. I believe you are following.
Yes, sir.
Yes, sir.
All right.
Yes, sir.
Yes.
So let me now give
Yes,
further,
sir.
let us give further explanation on these three decisions. Investment decision. This is concerned with how the funds acquired should be utilized so as to add value to shareholders' wealth. But before you can request for that fund, you will have done your what? Investment appraisal techniques. What type of projects can I embark upon to be profitable, to yield results, and for the shareholders to be able to get a refund of both their capital and what? And the dividend from their investment. So it is mainly concerned with how long-term assets, which is capital budgeting, and short-term assets, which is referred to as working capital, are managed to ensure that providers of funds get their funds back and shareholders' wealth is what? Is maximized. So you put that into consideration. Before thinking of, let me see how to get the fund, what is the type of investment you want to embark upon is the first thing. The money is not the first thing. Somebody will say, let the money come first. When the money comes, we know what to do and how to use it. No. You have to plan. Then from your planning, part of your planning will now be that, okay, if I'm going to go on this particular project that will give me this type of results, then how will I get the funds? Will be the next
Sir, you are muted.
Sir,
It
you
says
are
you are
muted.
speaking
We can't
to
hear you.
Can you hear me now?
Yes, sir.
Yes, sir.
Financing decision. I hope somebody is not playing with mute all, because I didn't mute myself. So financing decision. This is concerned with when, how, and where funds needed will be acquired. So you have to identify these three. That financing, you have to know when did you need it. There are some business that fail because of poor financing decision. Fine, you will have identified when you need the type of investments. You will have identified the type of investments you want to embark upon. You have drawn the plan on how to execute such projects. You have also identified how to source for the finance. But part of what you need to put into consideration is when will you actually need that fund? Not that you collect the fund and you started making use of it, that provided that I am still going to make use of this fund and I'm having the fund. Okay, you're having one party to quickly attend to, and let me borrow from it since I'm going to make profit from that investment, and let me borrow from the capital first. No, you have to identify when you need that money. How will you source for that money? And where the funds needed will be acquired. How are you going to get it? How is now in terms of, is it by equity? Is it from the shareholders? Or will it be from finance house? And you know the difference between getting funds from equity holders and when you get it from finance houses. You pay more cost on for sourcing for funds from debts through finance houses than when you get it through the equity holders, either from the owners of the business or shareholders. So this is concerned with when, how, and what, and where funds needed will be acquired. That is sources of finance. It considers the source of finance available, their cost, the cost that is associated to each sources of finance, either through debt or through equity. And the accessibility while taking into consideration the mix of debt and equity finance in the capital structure. Yes, there are some business that is being financed with purely equity. There are some business that is being financed with purely debt, while there are some business that is being financed with both equity and debt. And their profitability or their results will not be the same. There will be differences in that. And all this, I have said it earlier that we are still going to discuss on them on different topics. And everything here that we just explained here will be covered under cost of capital. We are going to treat that under cost of capital. That is under the cost of capital. The cost of capital will tell us what is the cost of financing a business with equity, what is the cost of financing a business with debt, what is the cost of financing a business with both equity and debt, what is the weighted average cost of everything. We are going to discuss on that, and we are going to solve practice. We are going to have a practice question on all. So the financing decision considers sources of finance available, their cost, the associated cost to each of sources of financing, and the accessibility. How easy can they have access to it? That's another issue. The accessibility. You going through financial institution, you know the terms and conditions that we apply. You go and bring security, you bring guarantor, you bring the forefather of the owner of the guarantor of the asset. You go and bring the third party that is related to the owners of the property, among others. And looking at all this process and procedure, the actualization or the investment that you have identified, you may not be able to even finance the business because of what? Poor accessibility of some of sources of financing. while taking into consideration the mix of debt and equity finance in the capital structure and its effects on the company's leverage, that is the financial risks. And lastly, dividend decisions. You have looked for type of investment to embark upon, and you have seen money where to borrow, and you have used the money to invest on that project that you know that will be viable, and you have invested, you have made your profit. What are you going to do on that profit? And that is what the dividend decision is talking about. This is concerned with what portion of the company's profits at the end of the period should be given as compensation to ordinary shareholders, and there will be a policy on it. The policy of a company on dividend policy will be can vary from one to the other. It is your business. The shareholders will also abide by that policy. So from the profit, we are going to declare, from the profit declared, we are going to be giving out maybe 30% of it as what? As dividend. And the remaining portion will be what? Will be your retained earnings, as the case may be. So it considers the factors that govern how and when to pay dividend and their likely effects on shareholders' wealth. On shareholders' wealth. Christian.
Hello, sir.
Yeah.
Okay, so my question is on this dividend decision. I think it's only when, is it when the financing, that is when you go through financing decision of raising the fund through equity, that this dividend decision will come to play. If all the funds or financing is done through debt, I think there will be no need for dividend decision, right?
Dividend decision is needed in either of the sources of financing. It's needed. Okay. Yes. Let me give you an example. If the source of finance is purely equity, as you, from your question, Christian, if I get you right.
Yes, sir.
All right. You have your workers as part of your stakeholders.
Okay.
And there is what is called conflict of interest. And it's still part of what we are going to discuss now.
Okay.
You can make a provision for share option to what? To your internal stakeholders, like your managers. Okay, out of the total profit. So we are going to be giving maybe 0.01% to the managers. It's still part of what? Dividend decision. Christian, okay. I hope I attended to your question.
Yes, sir. Thank you, sir.
All right. So we look at the various responses or reaction that might arise as a result of non-payment of dividend based on the composition of shareholders and their preferences. So these are the three key decisions that financial management entails. Those are the three key decisions. So from our learning outcome, the next point is we are looking at difference between financial management, management accounting, and financial accounting. What is the relationship between these three? What is the relationship between financial management and management accounting, as well as financial management and what? Financial accounting. Do you know that these three are different from each other? Do we agree with me? Financial management is different from management accounting and is also different from what? Financial accounting. All right, now let us look at the distinction. Please take note of all this. It is according to how the syllabus states it that this is what we need you to understand. And don't leave anything untouched. And as we are giving it to you, please let us also hold it tight. So financial management should be distinguished from other important financial roles. 1, management accounting. What do we understand by management accounting? In layman definition or in layman explanation of management accounting, a management accountant is someone that minimizes costs of an investment in order to do what? Maximize the profits. That is the management accountant. A layman, I'm just giving you a layman explanation. But financial accountants or financial accounting, the only thing financial accounting is related to is what? Is just to keep records. Is to do what? Keep records of what? Information. Starting from what? Historical data. That is what? Financial accounting. But financial management, okay, let us now look at it theoretically, what these materials told us about financial accounting and management accounting. Look at it here. Management accounting is concerned with what? Providing information for the more day-to-day functions of control and decision making. Providing information for what? For the more day-to-day functions of control and decision making. And if you look at it, can we link this to that my layman definition or explanation of management accountant? To do what? They are those in charge of what? Minimizing the cost of an investment in order to do what? Maximize the profits. And is it not from the profit that the owners of the business will now make a financial decision? So they look into what? Information for the more day-to-day functions of control and what? And decision making. That is management accounting. Now, financial accounting. Financial accounting is concerned with providing information about the historical results of past plans and decision, of previous plans and decisions making. Let us have a 5 minutes interaction section. So can somebody now make a difference between financial management and management accounting? Somebody.
Okay, so my name is Taiwo. Can you hear me? Please confirm if you can hear me.
Okay. Taiwo, you breach my rules and regulation. You have to put up your hand, but don't worry. I am identifying you first. Taiwo, you can go ahead.
Oh, thank you very much. Apologies. Okay, so to me, right, so financial management would be the like a kind of sourcing of funds from a surplus unit to where it is needed, where it is.
You are not telling us which one you are linking with financial management. Are you distincting financial management with management accounting? That's my question. Distinct between either financial management with management accounting or financial management with financial accounting.
Yes, I'm distinguishing between financial management and management accounting.
All right, go ahead.
Okay, so financial management is more of channeling funds from the surplus unit to where it is needed, which is called the deficit unit, and considering the investment decision, the financing decision, and the dividend decision. Why management accounting is more of like a kind of structured accounting where managers present like decisions, like make or buy decisions and other management accounting for how do I put it now, for profit maximization purposes and for effective decision making. Thank you.
Okay, thank you, Taiwo. So you can lower your hand, Taiwo. Let me take 2 other individual. Let me see. Michael.
Good evening.
You are welcome.
So, to me, financial management is basically talking about how funds
Aye.
should be dispensed to different level or different segmentation, and how funds should be earned and how it should be spent. So
Yes.
for me, that's for financial management. Therefore, management accounting is talking on how that fund is being used to run the business
Yes.
day by day. So, and how to make decision on those funds that are being made, and how to make decision on those funds that are being spent. So that's my own side of management.
All right. So thank you, Michael. You can also lower your hand. I need somebody now to now give me the distance between financial management and financial accounting. Okay, let me see. Josephine. Josephine, are you there? Okay, if Josephine is not available, let me have Sarah.
Sorry, can you come again with your question? I think you
All
changed
right.
the question.
The first two respondents have replied on distance or difference between financial management and management accounting. So I now need another person to give us difference between financial management with what? Financial accounting. What make their difference? Sarah, do you get that?
Yes, I got the question.
Okay.
I think, okay, for me, I'll just say that financial management is broader. They focus on the overall financial health of the company, while financial accounting is just basically for the external stakeholders by the documentations of the past events and everything.
Thank you. And lastly, I appreciate everybody that put up their hand. Esther, I want to make it a fair pairing. So I've picked 2 male, then I'm picking 2 female. So we'll stop it there, then we'll go ahead. So Esther, so thank you all. You can, others can put down their hands so that we'll not take too much of our time. I appreciate you all. So Esther, what's your view?
So why financial management has to do with how funds are raised, how you efficiently get these funds. Financial accounting has to do with records that have been presented either previously, recently, that will help us make decisions in running the company or enterprise.
Thank you all. You are all on the same page. So Esther, you can also bring down your hand. So let me give us a final answer to everything that we just make a discussion on. And that is also part of the point that we need you to all know. Take note of this. Everybody with their own opinion and with their own understanding. The examiner did not need you to bring words to words, or even in calculation as well. You are going to see, we are going to practicalize most of this in your practical exam on financial management. So we have various approaches to solving some of these questions. So every person that have contributed here, you are all correct. You are all correct. Now, let us now go into summary. What make the difference between what we just discussed about now? Now, the first summary is on management accounting and financial management. They are both concerned with the use of resources to achieve a given target. I believe we all agree with that. Both management accounting and financial management are both concerned with the use of resources to do what? To achieve a given target. Now, much of the information used and reported is common to both functions. All the information used by the management accounting and the financial management are the same. They have the same function. Now, what now make the difference? The main difference is in the time scales. the time of their usage. Management accounting and financial management. The main difference between these two is what? Is the time scales. The management is concerned with the long-term raising of finance and allocation and control of resources. It involves targets or objectives that are generally long-term by nature, while management accounting usually operates within what? Within a 12-month time horizon. Management accounting, they're having what? A short-term decision to make. While financial management is looking at what? Long-term goals. But management accounting will assist the what? The financial management objective. This just gives difference between what? Mission and what? Vision. So management accounting is just for a period of 12 months. What are we going to be able to utilize, minimize the cost, and maximize our profit? A short-term objective. While the financial management is having what? A long-term objective. I hope we're all there. This is not different from what we said, but this is more what? Summarized. It is what? More summarized. Look at it. Management accounting and financial management. They said both are concerned with what? They are both having the same goal and target. Just that the time difference, there is difference between the timing. The financial management is looking at the futuristic, while the management accounting is looking at what? The short-term objective. And it is the short-term objective, short-term goals that will attain what? The future objective. So if the short-term objective is not being achieved, that will affect the futuristic objectives. I hope we are following.
Yes, sir.
All right, now let us now look at it on the other way around. Management accounting and financial management. Oh, sorry. Further explanation on still on management accounting. So management accounting is concerned with providing information for the more day-to-day functions of control and decision making. This will involve budgeting, cost accounting. You can see we want to minimize the cost. What is the actual cost that's related to the cost of producing this material, and what will be the pricing rate that we are going to put in order to achieve our profitability? What is the cost of diesel consumption? How do we minimize the usage? Can we make use of solar electricity instead of making use of what? Instead of making use of diesel consumption in order to what? Minimize. So management accounting is concerned with day-to-day function of the control, and which involves budgeting, cost accounting, variance analysis, differentiating between the previous month's revenue and their cost, and with the current month's revenue and cost, what make the difference? What make that variance? Okay, this is the reason why we are having this too much of differences, and what are the likely solutions that we can put in place in order to solve such problem. And what? Evaluation of alternative uses of short-term resources. That is management accounting. Now let us now look at it in the side of financial accounting. Financial accounting is not directly involved in day-to-day planning. In fact, some organizations, do you know what they call the accountants? They said accountants are just bookkeepers. They just keep books. They keep records. Nothing concern accountants. The accountants, okay, how much is the printer we bought? Okay, that printer, we bought it. They will just go and look at the historical cost in their ARC file. We bought that printer 2 years ago, 15,000. That is the work of the accountant. And currently, okay, the depreciation value is at the rate of 10%. And currently, this is the value, and it's going to last for 5 years. All are the responsibility of accountants. So they are not directly involved in day-to-day planning, day-to-day control, and decision-making of an organization. Rather, the concern of the accountant of financial accounting is providing information. Oh yeah, accountant, how much do we spend last 3 months? Okay, this is the total amount of revenue, this is the total amount of material we purchased. Providing information about the historical results of past plans and past decisions that have been made. Its purpose is to keep the owners, including the shareholders and other interested parties, informed of the overall financial position of the business, and it will not be concerned with the detailed information used internally by management accountants and financial management or financial managers. I believe we all understand that. Are we
Yes, sir.
together?
Yes.
All right.
Yes, sir.
Now,
sir.
let us, thank you. Let us now move on to financial objectives. Financial objectives. We have three financial objectives. The first one is shareholders' wealth maximization. Aside from non-profit making organization, all corporate entities, they have been established in order to maximize shareholders' wealth. Sorry. That's the number one financial objective. 2, profit maximization. There's a difference between maximizing shareholders' wealth and profit maximization. Profit maximization can strictly be for one-man business owners, or it can also be for an organization. After giving out, increasing in shareholders' wealth, they also look at what? Increasing their own private pocket as well. And thirdly, growth in EPS, growth in earnings per share. These are the financial objectives. Shareholders' wealth maximization, or you call it maximization of shareholders' wealth, profit maximization, and growth in EPS. So the first one, shareholders' wealth maximization. If strategy is developed in response to the need to achieve objectives, it is obviously important to be clear about what those objectives are. And there is no corporate entity, I've said it earlier, that we said they have other objectives. All corporate entities will have other objectives. I will give an example. There can be a motive that somebody wants to solve a problem. Some businesses are problem-solving business, but that problem-solving business is not the primary objective. Fine, you have a mindset of solving a problem, but the major objective is to do what? Is also to make a profit when it is non-for-profit oriented organization. So most companies are owned by shareholders and originally set up to make money for those shareholders. Yes, for those that contributed. Okay, I want to buy shares, this want to buy shares, among others, to establish an enterprises. So the primary objective of most companies is to maximize shareholders' wealth. This could involve increasing the share price. Yes, they can increase the share price and the dividend payout. That's how to maximize shareholders' wealth, so they can increase their dividend payout. If at the point of buying share in that organization and the dividend policy is, let's say, 5% will be paid out as dividend, so the company can increase shareholders' wealth by reviewing their dividend policy, by increasing their dividend payout from 5% to what? To 10% as one of the motive of corporate objective, financial objective, sorry. The second one is profit maximization. You as the owner of the idea to establish, to bring up an innovation. You are not also doing that for fun. You also need to improve in your profits, profit-wise. In financial management, we assume that the objective of the business is to maximize shareholders' wealth. This is not necessarily the same as maximizing profit. It's not the same as maximizing profit. Firms often find that share prices bear little relationship to reported profit figures. For example, Tesla's share price grew from an average of $4.67 in 2010 to $63.4 in 2018 without recording anything other than annual losses during this time. So now tell us, what is the reason behind share price to increase and you are declaring losses at the end of the period? It's possible. It's possible. Because the total profit we are referring to, there are some other expenses that you may think that you have taken care of, and that has not been put into consideration. We have what is called provision, and part of this provision for taxation. At times, you may think that what you are preparing or your profit that you are declaring is according to actual results. It may not be according to the actual results, because maybe the provision that you are making, maybe you are under making provision. But by the time that the regulatory authorities come into your records and find out that there are some that you are not remitting appropriately, that may hinder your profitability. And you will have declared your profit to the shareholders, and you will have also increased the shareholders' wealth by increasing their dividend payout. There are a number of potential problems with adopting an objective of profit maximization. One, long run versus short run issues. That's one. Like I said earlier, you might have been declaring some profit, which is not the reality. So long run versus what? Short run issues. In any business, it is possible to boost short-term profits at the expense of long-term profits. Yes, it's possible to boost your short-term profits at the expense of what? Long-term profits. For example, discretionary spending that you did not even put, you did not make provision for initially, on training, advertising, maintenance, research and development. Sorry. Research and development, R&D, may be cut. This will improve reported profits in the short term, but damage the long-term prospect of the business. It may damage the long-term prospect of that business. Look at all what we talked about here. You are cutting costs. Spending on training. There is no training, no advertisement, no maintenance, research and development. They were all cut down. While you are declaring what? Bogus profit. And that will now hinder your what? Your future objective. That may damage what? The long-term prospect of such business. And how? All these that you're supposed to have put in place, and you are declaring unnecessary profit. And maybe your aim at the end of, maybe after 5 years, you want that your business to increase in their production capacity to a particular number, or to have a customer base of a certain number. And without all these expenses in place, it may be difficult for you to achieve that goal. So you want to be known all over Nigeria, and there is no any single form of advertisement, no research and development. It may not even be in form of advertisement. Your product can advertise itself, but you are not expanding beyond your current location. That's another problem. Research and development. By competing within yourself, you're supposed to, let me say that you are selling your product in Lagos Island, and it is well known in Lagos Island, and you are increasing your production capacity in Lagos Island. Everywhere you go around Lagos Island, you see that's your product in Lagos Island. And you still keep on increasing your production. It will come to a time, most especially if that product is a product that has expiry period or a perishable goods. It will get to a period that the product you just keep on producing, and at the end of the period, the product will not move beyond the capacity. Part of the research and development that you can put in place, just look into a new geographical area, and you have to spend on that. That your product will be acceptable. And part of it, you will need to make provision for what? Cost of transportation. You have to buy a vehicle. It is capital intensive vehicle that will be moving this product to that new geographical area. When you don't have supplier, you don't have distributors that can assist you in moving it from that region to another. Or alternatively, if you don't want to move it by yourself, you can get a distributors. Then you entice your distributor with some benefits. At the end of the period, if you are able to distribute so certain number to a particular region, you have a bonus at the end of the period. And by that, your cost will be increasing. Your profit will not be as what you ought to have them, but that will not hinder the long-term prospect of the business. Are we together?
Sir. Yes, sir.
I've turned this class.
Yes,
I've turned the class to a seminar, and you are
We
not
are
paying me for
together.
the seminar. All right.
together, sir.
So stock exchange will normally see through such a tactics, and share prices will fall at the long run. Quality of earnings. A business may increase its reported profit by taking a high level of risks. However, the risks may endanger the returns available to shareholders. The stock exchange will then generally regard these earnings as being of a poor quality, and the more risk-averse shareholder may sell. Once again, the share price could also fall. Yes, under this quality of earnings, let me just link this quality of earning to stock markets. You may have profits of 2 billion naira, but what will now be the value of that 2 billion naira if you want to exchange it for another commodity at the period that you are declaring that profit? You declare the profit maybe in the previous month, and in the new month, there is what? Fluctuation in the markets. There is general inflation. And you don't want just to increase your price because of competitors, and your product has been known already. You don't want to be the first person to increase the price. So the risk of your earnings may be high while you have declared what? Excess profit in the previous period. And fluctuation in the market can affect your profit at any time you earn it. Cash, accounting profits are just paper figure. Yes, they are paper figure. If dividends are paid with cash, investors will therefore consider cash flow as well as profits. So not only what you're having in the book as accounting profits, but how are you able to reuse that your cash? The more you reuse your cash, the more you reinvest, then the more profitability you have. So with that cash position, if you leave those cash idle without reutilizing it, and for you not to leave it idle, if you are not diversifying or you are not moving into a new geographical area, you just be seeing that your profit is increasing, then your total asset is also increasing. But at the end of the period, there may be a risk. And that risk of you leaving this cash idle is that at the end of the period, the cash may not be as valuable as what it's supposed to be. So the purchasing power of such cash will not be as high as what it should be in the previous profit that you are recorded. Earnings per share, EPS. So the third financial objective is growth in EPS. Growth in EPS. And this goes to shareholders. A widely used measures of corporate success in EPS, calculated as profit after tax and preference shares dividend divided by the numbers of shares in issue. So you have done that in your financial reporting, EPS. That is profit after tax minus dividend divided by total numbers of shares.
Yes.
As it provides a measures of return to equity holders. So EPS growth is therefore a commonly pursued objective. However, it is a measure of profitability, not wealth generation. And it is therefore open to same criticisms as profit maximization that we stated above. You as a shareholder, your shares in that organization, you are clamoring for what? Growth in your share price. Fine. They increase the dividend, they increase the return on your investment. But if you are to sell that your shares as at now, what is the value of that share? The disadvantage of EPS is that it does not represent income of the shareholder. Rather, it represents the investor share of the income generated by company according to an accounting formula that you are using. While there is obviously a correlation between earnings and the wealth received by individual shareholders, they are not the same. If somebody earns 20 million in Shell, another person can earn 15 million in Globalcom. It's possible that somebody that earned 15 million in Globalcom to have more value than somebody that is having 20 million in Shell. Based on what? Based on the purchasing power of what you are earning from that investment. And you know they are of different types of investment. They are not on the same line of business. Shareholders and other objectives. Are we there?
Yes, sir.
Who are shareholders? Who are shareholders? Oh, sorry, stakeholders and their objectives. Sorry, I say shareholders. And shareholders are still part of stakeholders. Stakeholders and their objectives. What we call stakeholder is somebody that is having stake. Stake is also known as what? Interest. Stakeholders are those that are having interest in what an organization does. A stakeholder is a person that is what? That has an interest in what an organization does. And we have different stakeholders. And as they all have different expectation. All stakeholders has different expectation. What I'm expecting from an organization or individual or group of people is different from what you are expecting from them. So this stakeholder theory will tell us different stakeholders and what their expectations are. A stakeholder is a party that has an interest in a company and can either be affected or be affected by the business. Yes, can either be affected or be affected by the business. Typical stakeholders for an organization would include internal and external. internal and external. Please, these categories of stakeholders that I quoted here is according to my research. You know, I mentioned it earlier that ICAN is here to give us syllabus, give us the study notes. But generally, a stakeholder can be divided into two, internal and what? External. But my own further research gave me three, internal, connected, and external. And look at the connected and external. There is no difference between the connected and external. Connected is a little bit closer to internal. That's just the difference. Connected is a little bit closer to internal, while external doesn't have anything to do with the internal stakeholders. And they are totally different. Their own expectation will be totally different from that of the internal. Because the internal will have more interest. The internal will have more interest than the external. The internal will have more interest than the external. So you can put it as internal and external. In general text or in other text, the connected here were all categorized as part of external. They are all categorized as part of external. But if we look at it in a more academic level, you can see that the connected will be like more even closer to the internal than the external. Do you all agree with me? Or the majority agree with me?
Yes, sir.
Now,
Sir.
internal, look at the internal stakeholders. Don't forget, what do we call stakeholders? We said these are the people that are having interest in what an organization does. In your organization, you yourself that you are working with, you are an employee of that organization. You will have interest in what that organization is doing. Then that's your competitor. You that you are working in Zenith Bank, you'll be like, GT Bank is our major competitor, but our own products and services are better off that GT Bank. I'm not here to advertise any business, but just for explanation's sake. And don't fight yourself, because I know Sarah works in Zenith Bank, while I think Esther works in UBA, and you are connected competitors. So who are internal stakeholders? We have employees, managers, and directors. Connected, we have ordinary shareholders. They are equity investor. We have suppliers. We have customers. We have finance providers, which are debt holders or bankers. And we have competitors. Then the external, we have government, community, regulators, pressure groups, among others. Look at my definition here. Internal stakeholders are people whose interest in the company comes through a direct relationship. Look at it. Internal stakeholders are people whose interest in a company comes through a direct relationship. Through a direct relationship. An example include employee and managers, ownership, owners of the business, and directors. So there are people whose interest in a company comes through a direct relationship. We have external and connected stakeholders. They are those who do not directly, they did not directly work with a company, but they are affected somehow by the actions and outcomes of the business. They are affected by the action and outcomes of the business. So we are in interactive section now. Again, we are in interactive section. So I need everybody, or sorry, I need some of us to participate in this, because this one, as I said earlier in the other one too, that we we make it a live interactive section that your own point is different from another person's points, and everybody's points are unique. They are unique. Now, my question, what are the expectations of each stakeholders? What are the expectations of these different stakeholders? So if you are picking one, you tell me the stakeholder you are referring to, and you tell us the expectation of that stakeholder, and you omit, you close your discussion. We move on to the next person. Oluwakemi, you are recognized.
Okay, sir. I'm speaking the employee.
Okay, what's the
The
expectation of the employee?
Job security and
One,
good working condition as well.
good working condition. You did not say another thing. Major one, you leave.
Bonus, increase in
You leave
payment.
the major ones. I are talking of secondary.
Okay.
Job security. We know
Bonus,
about
increase in
we
payment.
know most people that jump from one job to the other within three months. What are they looking for? If you are leaving one job to another, definitely the job you are leaving that did not send you away is having security. But the security that most of us are looking for is what? Improvement in your salary.
Financial.
Yeah,
It's financial, yes. Thank you, Oluwakemi. Oroma.
Sir, I'll pick investors.
Okay, what's the expectations of investors?
They'll be looking at profitability.
Okay, not only profits.
Not only that.
Not only that.
They also be looking at do we look at liquidity?
You tried. Thank you, Oroma.
Yes.
So under that, investors, majorly the investors are looking at maximizing of their wealth. That is the major one, to maximize the wealth of the shareholders. So thank you, Oroma. You can lower your hand. Michael.
Okay. Mine is government.
Government. Let me hear from you.
So for government, increase in employment.
Increase in
and also,
employment. Are you talking? So are you one of the government officials? Are you saying the right thing?
And also increase in tax. More money
Increase
from
in
tax.
tax. That is the primary. You are putting primary to last. So thank you, Michael.
Thank you, sir.
You are welcome. You can lower your hand, Michael. Peace. Let us have peace.
Okay,
Michael,
sir.
you can lower
I'll
your
talk
hand.
about,
Okay, please go ahead.
yes, I'll talk about customers.
Okay, what the customer wants? Tell us. What is the
Quality
expectation of customers? Quality assurance. Yes. Is that all?
That's what came to mind just now.
All right. Thank you. Thank you. You are correct. But we still have more aside from quality assurance from the customers. Thank you. You know, customers, they have so many things. In fact, quality, maybe we can put quality in number 2 from customers. Customer in Nigerian customers. Hey, number 1 is what?
Yeah, that's true. Pricing.
Pricing.
Yeah, pricing.
Price.
Low price.
What concern quality with customer quality? If it is 1 naira difference and the quality is better than that of the one that is 1 naira lower, my customer will go for 1 naira lower than that quality. They will go for quantity than quality. Thank you. Peace. Ibrahim.
Good evening,
Ibrahim,
sir.
are you there?
Yes, I'm there. Good evening, sir.
You are welcome.
Yeah, thank you very much, sir. Sorry, before I answer your question, I also have a question and I don't want to forget about it. That's why I want you to permit me to ask now before going to your question, sir.
Okay.
Sorry, I want to ask if the equity investor and creditor are the same.
Equity investor.
Yes, sir.
And creditor.
And creditor.
No, they are not the same.
They are not the same.
Yes. Let me explain who creditors are. Creditors are those that you buy material from on credit to pay back at a specified period of time. And in form of trade credits. Supply me diesel, I will pay you in 1 week time. Supply me raw material, I will pay you in 1 month time. Those are creditor. But equity investor, they put in their fund into that business.
Okay, sir. Thank you very much, sir.
You are welcome.
So I want to talk about community and pressure group.
Okay. No, you choose one. We have community separately. We have pressure group separately.
Okay, community, sir.
So what's the expectation of community?
Their expectation, one of their expectation is to determine social responsibility of the company.
Of the company, yes.
Yes,
you are correct. So to give back to the community in which the company is operating. Thank you, Ibrahim. You can lower your hand. Aleshin Lawyer, I will take 2 other person again. Aleshin Lawyer.
Good evening, sir. Sorry.
You are welcome.
Let me pick pressure group.
Pressure group, what is the expectation?
It has to do with transparency. There should be proper accountability.
Okay. So there should be a transparency and accountability in dealing the dealing of the organization.
And in the aspect of honest reporting on environmental and social performance of the company.
Thank you very much, Aleshin Lawyer. Taiwo. Michael, you have spoken before. I will not pick you again. Taiwo.
All right, so I would like to talk about the directors. So for the directors, their expectation is to increase their portfolios and their status in the society.
Very correct. Olumuyiwa.
Yes, fellow competitors.
Okay. So
the fellow competitors will want to know the performance of the company for benchmarking purposes.
Benchmarking, yes, for benchmarking purpose. For benchmarking purpose. Okay. That's cool. Adeola. And lastly, after Adeola, Inioluwa. After Adeola, Inioluwa.
Yes, I want to talk about the community.
Community.
Okay. Yes, the expectation is provision of employment and social amenity.
Social amenity. Thank you. Thank you. Inioluwa, lastly.
I didn't raise my.
Ini.
You not to contribute. Yay!
Inioluwa. All right. Ini, you are still there. We can hear you. All right. So thank you all for your contribution. So let every other person lower their hands. We are all correct.
Sir. Sorry,
Who
sir.
is that?
This is Michael. I would like to address something. I think because I've observed that there's another Michael in class, but I'm also going by
putting up your hand.
So please. So please,
That's true. We are two Michaels here.
Okay.
Yeah, so please let it be
Okay.
acknowledged that we
Okay.
are actually two Michaels. Thank you.
Okay. All right. So I'll be calling Michael whatever that is behind the Michael. So thank you for that observation. So as I said earlier on, that see, you can see that as it is more interactive this way. Believe in me, there is no how that questions will come in most of what we are even interacted there, that you will not know what to write. There is no how. I'm having that courage. So we are all correct in one way or the other based on what we have explained earlier on all these types of stakeholders that we are having. So let us now look at what this matter tells us
sorry, can you hear
about
me now?
each of the stakeholders and their expectation. Who is that?
This is Iniolua. Sorry, I had an issue with the mic on my system.
Okay.
I just connected to my headset, the
Okay.
output. Yeah, so I was going to talk about regulators, right?
Okay. Nobody mentioned that
Yes.
regulators. Thank you.
Yes, Esther, I was going to talk about that tax authorities. I wanted to use them as an example, that they will be interested in ensuring that the company is compliant in terms of remittance of taxes.
Okay, it is somehow in you are correct. If in fact, if you bring it in exam, I will mark it for you. You are still correct. But if you look at it critically, the tax you use as a sample is related to government. But regulators, the business will be in an organization, in one association, will be in one association or related business, or in the same in some sector. Yes, let me put it in that way. So in that sector, there will be rules and regulation of that sector. So part of the expectation of regulators now is for that company to abide by the rules and regulation of that association or industry that that person is operating. Another one is annual due or subscription. That's part of their expectation. Inoluwa, thank you. But if you put that,
sir, can we use NAFDAC as an example?
In regulator?
Yes.
Yes, NAFDAC is among regulators. It's among regulators. Sun is among regulators. Depending on the nature of that business. So we have different regulators. Financial institution, CBN is a regulator if you are into financial institutions. I hope that is clear.
Yes, sir.
All right, now let us look at ordinary share and each of the stakeholders and their expectations. As we mentioned that their expectations are differ. So the first one, we have ordinary shareholders. What is the expectation of ordinary shareholders? Maximize the wealth as a result of their ownership in that organization. Directors and managers, they don't need anything than maximizing their own rewards. They need more rewards. That's why you will see that there will be conflict between the expectation of managers and directors and the owners of the business. And that is what we are going to discuss under agency theory, because directors and managers are acting on the interest on behalf of the owner, on behalf of the principals. And their interest is wide. They are seeing that we are the one into this business. We are the one doing this, doing that, daily running of the business. We wake up as early as much as possible. We did not sleep on time. We did not get home on time. Their family did not know how they have been hustling from the business. And we know how voluminous profit that we are making with this. And I'm supposed to have this. I'm supposed to have the others. So these are part of the expectations of directors and managers, so maximizing their own rewards. Employees, maximizing their rewards and continuity of employment. Maximizing their rewards and what? Continuity of employment. And what is the reward? Increase in salary. That's one of the major ones. Continuity of employment, provided that nobody will send me away from this business. I'm okay. I don't need to go and be looking for any other job, provided that it is certain, maybe after 2 years, that there will be what? There will be an increase in salary and other remuneration. Supplier are those we can make use of that creditors as part of supplier. So suppliers give you products They supply you maybe raw material for you to use and pay back at a specific period of time. So what is the expectation of suppliers? To receive their money, to receiving full payments as what? As at when due. And part of the agreement may be you must pay back the supply, the previous supply, before I can supply a fresh one. So the expectation of the supplier is receiving full payment as at when due. Finance providers of finance, you want to source for financing, majorly financial institution, bank. What is the expectation of bank? Receiving full payments, both the principal and the interest, as at when due, and minimizing defaults. That's another expectation. How you will be able to reduce defaulting, how you won't default your repayments. Customers, yes, you can see satisfaction in terms of goods is one of the expectation of your customer. If you buy a product and you are satisfied, you enjoy that service. Some will say it doesn't matter how much I'm paying for that service. So satisfaction is the key, the first one. Followed by service. How will you be able to render the service for the customer to be satisfied? So some people will say that you have a good product, you have a good product, and your service is poor. That's another thing. Quality. Majority go for quality. And lastly, price is the major problem that customers usually have. And that is why some businesses survive, because of what? They put all this into consideration. Products at the best quality and at affordable price. No, products at the best quality and then availability and what? And at affordable price. If the product is of a good quality and it is not always available, so that customer will not be satisfied. In fact, that customer can look for alternative that can render them that service at any time they needed it. And affordable price. And this is one of the problems that major businesses face. Pricing. It is key. It is important in business. So if there is poor pricing system, that may hinder the expectation of a customer. Customer can, because of 2 naira, believe me, because of 2 naira, and go for a substitute product. Is it not the same thing? Bonvita and Milo. It is both beverage. Then is it not to drink tea? Why will this one be higher by 5 naira and this one is even in fact, that will be the time that some customer will tell you that I don't even know that this one is even better than that one. Is that not part of your reaction? Customers, we are not responding.
Yes, sir. Yes, sir.
You are right.
Yes, sir. Right.
Yes, sir.
Government.
Yes, sir.
All right.
Sir, you're right.
Government. The government will have now, for the government aspect, now let us look at it. The government will have political and financial interests in the organization. It is 2 interests that government is having. Political one, everything is politics in government. That business, it is PDP that is empowering that business. Political and financial interest in the organization. So politically, they will wish to increase exports and decrease imports while monitoring companies through the Competition and Market Authority. So it will be a good one. And that will also increase the gross domestic product of a nation if government can assist locally made products to be consumed in our dear country and make a provision or have what is it called, MOU, Memorandum of Understanding, in form of trade facilitation between one country and the other country. So what do we have in our country that can be exported to other country? And believe in me, with this, those that are exporting their products, they will gain more than those one that you have internally consumed, because part of the benefit is that if you are selling that your product here, you are going to sell it using what? Using your local currency. But if you transfer it to the other country, you receive your payment in what? In foreign exchange. And by comparing what you are using, what you are selling outside the country with how much you are selling it in the country, when you convert the currency to your local currency, you will see that you gain more. And that will also assisted more in the growth of the economy. That is one of the, that should be, let me put it that way, that should be one of the expectation. I'm putting it in my own way. That should be one of the expectation. But this system said that it is among the political interests of the government on all businesses to increase exports and decrease importation in order to encourage local consumption and also encourage exportation of our own local product to be known internationally, while monitoring companies through the Competition and Markets Authority. Financially, they require businesses to earn long-term profits in order to maximize their own taxation income. So this material even say the same way when one of us is giving the expectation of the government, that the government will expect the company to give more employment to individual, but that's not the major aim. The major aim is to maximize their own taxation that they want to get from you. Professional and regulatory bodies, and there's nothing that is bad in that for government to expect their return from an organization. Definitely, if they're expecting more company to maximize their taxation income, government to maximize their taxation income, so they are also willing for such organization to do what? To improve in their profitability. Professional and regulatory bodies, what are their expectations? One, to ensure strict adherence to rules and regulation and due payments. Yes, to ensure what? Strict adherence to rules and regulation and payment of their dues, and payment of their dues as at when due. The community at large, the goals of the community will be broad, but will include such aspects as legal and social responsibilities, pollution control, and employee welfare. Are we all there?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Now, one out of my do's and don'ts, if I give you an assignment and you did not submit, we are going to fight. We will fight, because there is no way that you are going to do financial management without practicing by yourself. You need to practice by yourself. So aside from the one that we are going to solve together in the class, there will be a provision for examinable questions that we are going to be giving to you at the end of each topic that you are going to go and lay your hands upon, which you must solve it, send your solution before the next class. Then, while from my own side, I will also send my own solution so that you will compare what you have done with what you're supposed to have, so that you make correction as early as possible. And that is how we are going to be doing on each topic that we are going to be treating. So this is one out of it now. Do it yourself. I did not say do a group work. Do it yourself. Suggest the potential conflicts in objectives which could arise between the following groups of stakeholders in a company. Look at the question critically. You are in skills level, not in foundation anymore. These are the type of question you'll be expecting. The one we treated upstairs, it's possible examiner may just say that identify various stakeholders and tell us their different expectation is possible, but you can see how advanced question in this form suggest the potential conflicts in objectives which could arise between what? Between the following groups of stakeholders in a company. One, we have employees and shareholder. What is the different opinion that these two people will not agree among themselves? So tell us, what is the potential conflict that can arise between employees and shareholders? Two, the potential conflict that can arise between customer and community at large, shareholders and finance providers, customers and shareholders, and lastly, government and shareholders and managers, lastly. Are we all together?
Yes, sir.
Please, sir, we are
Yes, sir.
writing the assignment. Please, can you go down a bit?
I will share you this
It will be
slide
shared.
immediately
Do we need
after
to
this
write it?
class.
It will be shared.
I'm not in
I
the
will share
group
you this
here
slide.
too. I'm not on the group here too, please.
Tell admin to add you now.
I've done that severally. Nothing
How did
from
you get the
the
link to the class?
The class.
They
If you are
sent it
not
to
in the
me
group,
personally.
you are in the group.
The admin sent it to me.
So once you click on it, and you will see yourself in that WhatsApp group.
No, it's not only her. Some of us are not in the group yet.
Don't worry, I
Yes,
will complain to the after the class. You all should complain to the admin. Did you get that?
Okay, sir.
So you can screenshot it.
Yes, I've
Screenshot
done
it.
that. I've done that.
All right. Mohammed, your hand is up.
Yeah, good evening, sir.
Welcome.
Good evening. Sorry, sir. You made mention of ICAN has not released the syllabus for this course.
So the syllabus is released. Is the notes, is the study notes, study text that is yet to be released.
Okay. So we are actually working with the syllabus. That's what you're
Yes,
saying.
we are working with the syllabus. What we are doing is according to the syllabus fully.
Okay.
In fact, if ICAN have to release their what is it called? Their study text, I'm giving you 100% assurance. It will not be better than this, or it will not be more than this.
Okay.
100% assurance.
All right, sir. All right. Thank you, sir.
Hey, more hands up. We have not finished class, so Michael.
Okay. I thought class was done, so that was why I raised my hand. But
No,
since class is
we have
done,
not.
let me.
We have not finished class. So my intention is to finish this topic here. Let me see how many pages remaining. Do we still have another class after this? We don't have another class. That's one of the benefits on this FM.
So we can do till 10 o'clock.
No, it's too much. 2, hold on, no. 3, 4, 4, 4. It's not much. It's not much. We can conclude it. It's not that much.
Abi,
It's not much. So let's move on. Although we're supposed to have moved more than this, just because of the introduction and the rules and regulations that we are sharing with each other. That's why we took much time. Boluwatife Ajayi.
Good evening, sir. Good evening, everyone.
Good evening.
So my question is with respect to the timetable.
Okay.
I want to ask you slightly mentioned it, but would 2 hours, because I see that on the timetable would have FM just once, but would 2 hours be sufficient to cover the whole syllabus for this
The whole syllabus. Okay, it's a good question. We are still looking at how we are going to go about it. If you look at the timetable critically, at the professional level, we have what is it called? We have SFM two sessions in the morning and in the afternoon. And one out of it, the lecturer that will take the risk management, we take risk management at two level, at skills level and at professional level. And for those that are in professional, they will need the introduction aspect of the risk management, which is what you are going to do at this stage, because they will not understand the advanced risk management if they did not know the basic risk management. So we are looking at combining the class at the point of the skills level doing their own basic risk management together with that of the professional. But we are looking at it that there will be a clash because you will also be having class in that morning as well. But don't worry, we'll find a way around it. And aside from that, I look at everything. God's willing, we're having how many topics? 15 topics. So if we are able to utilize our time very well, the way we all compose ourselves today, we are going to even end it before the 10th or 12th week. It's possible. 10th or maximum 12th week, we are going to conclude everything. But it's possible, provided that we compose ourselves this way, which I really appreciate that. Then, aside from that, possibly again, I've also discussed with the admin, instead of this 5 to 7, maybe we should just extend it to 5 to 8, 3 hours for this Sunday alone. This is the only day that we have it on the timetable for now, because we have not seen the other period that we want to slash it to. But this one, maybe we should just make it 5 to 8, since you don't have any other class for Sundays. I hope that is clear.
Yeah, thank you very much, Sam.
You are welcome.
Yes, sir.
All right, the role of management and goal congruence, agency theory. Let me explain what agency theory is all about. Overview of agency theory. Agents and principal, or principal and agents. The business organization is run in form of what? A principal and agency, whereby the principal, who is the owner of a business, will give the responsibility of day-to-day running of the business to the agents. And who will be the agents? These are the managers. These are the managers or directors to carry on the business on behalf of who? Of the principal. That is agency theory. One is the principal, the other one is the agent. One is carrying on the business on behalf of the other. So the agent is carrying on the business on behalf of what? On behalf of the principal, which is the owner. Now, there will be a conflict between these two. Different interests. The owner of the business, I know, yes, you are the owner of the business. You are running it. In fact, before the owner of the business even established to be having, what is it called? To be having employee in the organization. Most small business entity started by the owners, by themselves. But because of expansion, growth, development, then you can't all do it all alone. It will even go to the extent that the owner of the business may not even go into that business any longer. What they will just be waiting for is what? Report at the end of each period. But the agents usually have problem at the end of the period. And what is the problem agents usually have? It's normal. It's normal. And the major problem is remuneration. And on this, there are some principal, even without the agents requesting for some of this, the principal are doing wonderfully well than expected. Why there are some principal doesn't care about the agents, and that is what usually causes issue between the agent and the principal. Knowing fully by the agent that this business is running smoothly and you don't have any problem, and why are those agents poorly remunerated? That is part of the reason why the interest of the agent will be totally different from the principal. Are we there?
Yes, sir.
Yes, sir.
So that's just the summary of agency theory in all. So let's go to the book, what the book said about agency theory. Agency theory is often used to describe the relationship between the various interested parties in a firm And this can help to explain the various duties and conflicts that can occur. Agency relationship occur when one party, which is the principal, employs another party, that is the agent, to perform a task on their behalf. In particular, directors who serve as an agent act on behalf of shareholders, who is what? Who is now the principals. Directors, managing directors, board of directors. But shareholders are the owners of the business, standing as what? The principal. Shareholders can be a group of people. Bring their heads together, not an individual alone now. Shareholders are those set of people that organize themselves. Okay, this is a kind of business. If we come into this business, we can make a do with this type of business. So what the shareholders will now do, they will contribute their ideas, they will contribute their in development, they will contribute their quotas financially. Then they will now employ what? Agents to do what? To carry on the business on their behalf. On their behalf. While the principal will be monitoring the flow of the business. How to reduce the problem caused by agency relationship. In finding ways to reduce the problems of the agency relationship and ensure that managers take decisions which are consistent with the objectives of the shareholders is a key issue. It's a key issue. For example, managers can be seen as the agents of shareholders. Employees as the agents of managers. Managers and shareholders as the agents of long-term creditors. In most of these principal-agent relationships, conflict of interest will now exist. Can you link this together now? Sometimes managers can be seen as agents of shareholders. Shareholders are not in the day-to-day running of the business, but the shareholder knows fully that managers know how the business is being run. This is now total, you know, between these managers and these shareholders, we now have three parties. The shareholders in this form are not the principal. The owners of the business are the principal. Shareholders are equity contributors. While managers work on behalf of the principal, but the shareholders know that the manager is having what? Full information about how the business is being run, to know how they are going to fight for their own shares, how they are going to fight for their own dividend. Employees as agents of what? Managers. From all aspects of operation. Most of the times, managers oversee the affairs, how the business is being run, what is the required input, how do we get the output, then what will be the profitability. But employees, at the long run, they are the one in the processing stage. So they know how to manipulate, how to get more than what the company expects from the outcome. So employees can now serve as what? Agents to the managers. Managers and shareholders now can now serve as what? Agents of long-term creditors. Long-term creditors, creditors that can supply you raw material for to be paid in maybe in 6 months or 8 months or 9 months. But as at when due, the creditors are not getting their pay. In that aspect, managers and shareholders can be as what? Agents to long-term creditors. So in most of these principal-agent relationship, principal-to-agent relationship, conflict of interest will now exist. How can conflict of interest exist? Look at it, starting from this first sample. Managers can be seen as what? Agents of shareholders. Shareholders want to get information from managers, and they know they cannot just get that information. They have to be a very close relationship. They have to create a very strong relationship with the manager. It may be in form of giving the manager some tips or some incentives at the end of the period so that they can get more insights, insider information. Employee as an agent to the managers. Okay, if the chips are down, employee, how can we do it? But managers cannot also do that without having another relationship with the employee. Okay, don't worry. Is it about the salary? I will know how to push for your salary increment. Managers and shareholders as agents of long-term creditors have done that. So all this, there will be an interest at the end of the period. So the problem lies in the fact that once the agent has been appointed, they are able to act in their own selfish interest rather than pursuing the objectives of the principal. The principal objective is a long-term objective, while the agent objective will be the short-term objective. And there are so many aspects of closing the gap between the interest of the principal and the interest of the agent. One out of it, I think, is still part of what we are going to discuss. One out of it is that share option. The principal can give an option to the agent to have share in the organization, but a certain portion. So with that, the manager, the agent will feel as what? As being part of the business. So instead of that agent to be thinking of what? Short-term goal, the agent will now be thinking of what? Long-term objective, long-term goal, together with that of the principal. That's one. Another one that is mostly common is that there will be a percentage on profits making, and it is mostly common. Some organization will say that you as the director, as the managing director of a particular segment, that you are going to be having 1% of the total profits. I don't think, if some of us have experience of this kind of information, the managing director, you are not having any salary, but your own salary will be the total profit the company make. You'll be having, let's say, 10% of it as your own gain every month. Every month. So with that, conflict of interest will still set in, because that type of manager or agent may not also be looking at the futuristic, but be looking at what? The current goal. It's based on profit. So let us make all the profit now so that I will get all my own benefits. Because the agent may be saying that he or she may not know when it will be asked to resign as the managing director of that sector. So rather, the short-term goal will be part of what that type of agent will be looking at, rather than the long-term objective. I believe we are following.
We are.
Yes, sir.
Yeah.
All right.
Yes, sir.
Yes, sir.
Yes, sir.
The divorce of ownership and control, by far the most important conflict of those mentioned above, is that between the interests of shareholders who own the company and the directors or manager who run the business. Shareholders are reliant upon the management of the company to understand and pursue the objectives set for them, that is for shareholders. Although shareholders can intervene through resolutions at general meetings, the managers are usually left alone on a day-to-day basis. Shareholders are still part of the business because they have shares in the business. But managers are employed, they are being given a portfolio. You are the manager, and you can be advised to leave that position at any point in time. Management are uniquely placed to make decisions to maximize their own wealth or happiness rather than the wealth of the shareholder. That's another conflict. Management, the owners of the business, are uniquely placed to make decisions that will maximize their own wealth or happiness rather than the wealth of the shareholders. Now, how can we now close the gap between the conflict between the agent and the principal? We have managerial reward scheme. Managerial reward schemes. One way to help ensure that managers take decisions which are consistent with the objectives of shareholders is to introduce carefully design remuneration packages. Design remuneration packages. These schemes the design remuneration packages should have the following characteristics: be clearly defined, impossible to manipulate, and easy to do what? To monitor. These are the characteristics of a design remuneration package that will enable the agent to work in full interest of the principal. Two, among the characteristics of the remuneration packages that will be designed for the agents is to link reward to changes in shareholders' wealth. Link rewards to changes in shareholders' wealth. So as the shareholders' wealth is increasing, the agent remuneration package should also be increasing in line. It may not be totally in line with that of the shareholders' wealth, but as the shareholders' wealth is increasing, the remuneration packages that will be designed to such agents should also be linked to that of the shareholders' wealth. Thirdly, match managers' time horizon to shareholders' time horizon. So comparing the agent's time horizon, time spent on the business, with that of the shareholders. And we can never compare the time that will be spent by the agent with that of the shareholders. The agent is like the person running the business. It's like the owner. In fact, it's like the owner of the business, because day in, day out, psychologically and physically, the agents are available. But shareholders, they are only available with their contributions, financial contributions. And lastly, encourage managers to adopt the same attitudes to risks as shareholders. Risks as that of shareholders.
I'm using my phone.
Fair B. Fair B, please mute your mic.
I am muted.
You're muted, so.
Can you hear me now? Can you hear me now?
Yeah, we can hear you.
All right. So common types of reward schemes that can be made available to agents include remuneration linked to minimum profit levels. Some organizations do that. So some of these agents don't collect salary, rather they collect some portion of profits. Economic value added. They must be recognized in terms of the productivity of the organization in all aspects. And lastly, revenue growth. So the remuneration package should also be linked to revenue growth. So the more the revenue increases, then the more the remuneration to the agent should also increase. And lastly, executive share option scheme. Executive share option scheme. This is part of the major one that most organizations use to tie down some of the agents. So you have a portion of share in the organization. You becoming part of the shareholders of the organization. So with that, most agents will not only be looking at short-term objective of the organization, rather the long-term objectives. Okay. So from our learning outcome, I think this is the last point that we are to discuss on, which is on objective setting in not-for-profit organizations. Objective setting in not-for-profit organizations. The primary objective of not-for-profit organization, as we all know, is not to make money. They are not money-making motive, but to benefit prescribed groups. To benefit prescribed groups of people. As with any organization, not-for-profit making organizations, we use a mixture of financial and non-financial objectives. We make use of financial and non-financial objectives. The financial objective, they will make profits, but that profit will not be for spending purpose, but just to do what? To support the non-financial objective. The business will be established, they will make profits, but the motive of that entity, the profit gain, stop that. The profit gain will be for a specific purpose, which will be attained. As with any of the organization, NFPs use a mixture of financial and non-financial objectives. However, with non-for-profit entities, the non-financial objectives are often more important and more complex because of the following. One, most key objectives are very difficult to quantify. So you cannot quantify the benefits, especially in financial terms. Example, quality of care given to patients in a hospital. Multiple and conflicting objectives are more common in non-for-profit organization. Example, quality of patient care versus number of patients treated. Lastly, I think I mistaken not-for-profit oriented objective as the last subtopic under this topic. I think the last one should be value for money, VFM, value for money. Yes, value for money is the last. Value for money. Value for money is otherwisely known as, or otherwise described as, 3 E's. 3 E's: economy, efficiency, and effectiveness. In short, value for money describe efficient utilization of scarce resources in order to attain maximum output, to minimize the usage of scarce resources in order to attain maximum output. and which is described under 3 E's: economy, efficiency, and effectiveness. Value for money can be defined as achieving the desired level and quality of service at the most economical cost, at a cheaper cost. We want to achieve a better result with a little resources at what? At economical cost, at the least cost, which is possible. And part of the essence of this value for money is avoidance of wastage. Avoidance of wastage. And one out of the 3 is specifically explain the avoidance of wastage, avoiding wastages. So the 3 is assessing whether the organization provides value for money involves looking at all functioning aspects of an organization. Performance measures have been developed to permit evaluation of each part separately. So looking at this diagram, we have inputs. So the 3 E's, we have the economy, efficiency, and effectiveness. So the value for money using the economy is relating to cost and cost control. And what will be the input? Material. The material that will be that will be purchased should be at a minimal cost or at a lesser cost. Staffing that will be used in producing the material to process the raw material to become a processed end product, and the cash that will also be used, the limited cash, to be used to achieve a quality raw material at a lower cost, a labor or staff at also a cheaper rate, which will also give a better result. Efficiency. The focus of efficiency will be on systems and method, which is talking about the processing. So interaction of people, structure, information, and task requirements. And the output, which will now be from the effectiveness. So efficiency, it is the maximum utilization of that raw material, the material that is gotten at the minimal cost. So the efficiency is how you are able to make use of that resources effectively, efficiently, without wastage, by avoiding any form of wastages in order to have a better output. Now, the last one is effectiveness. And what is the focus of this effectiveness is to achieve that target. So which is the outcome? Meeting what? Plan objective, which is what? That quality result that you are looking from, the raw material that you have processed through the staff and the money that you use in getting the raw material, and to attain the maximum output. So let's take them by order. Economy. Economy, minimizing the cost of inputs. And for you to minimize the cost of inputs, so you have to look for alternatives. And by looking for alternatives, we also need to ascertain the quality with that of the value of that quality. So minimizing the cost of inputs required to achieve a defined level of output. Efficiency, ratio of output to input, to efficiently make use of all the material. Oluwakemi.
Excuse me, sir. Someone is messing with this system. They've been removing me from the class. Like, this is the second time person is doing that.
I don't think so. I
Still
should
say someone
believe.
just removed you.
Is that possible?
So I experienced it earlier too. I had to rejoin.
Like, it's not funny.
Okay.
Who is that person?
I will complain that to the admin. Why I'm saying that it may not be possible is that it is only the admin that can do that. And as I am here, I am the only admin here. But why I'm saying that it is possible is that sometimes it may be a network. It may
If
be
you're
a
using a
network.
phone, it's possible you
Network
can
is
remove
different thing
someone.
on my from so
It's possible.
just been rejoining. Is the network.
So that's why I'm saying that it may be the network. So, but I will still confirm from the admin how possible is that. I will confirm from the admin how possible is that. So if it is not from network, so you said what?
I say it's possible. When you go to the people, you look at them. When you click any of them, you can see the option for you to remove somebody.
Yeah,
So
it's
that means
possible.
okay, don't worry.
Because if it's network,
We
you will
have
have
a
saved
way.
your network. But it
We
says
have a way.
someone removed you.
We have a way of doing that by not giving permission to anybody except admin that can do that. So we are going to look into that. And please, if you are the one doing that,
The person that said
it
it's
is not a
possible,
good
the person
one
that said it's
now.
possible should try to kick me out and let me join because I'm not sure if it's
And I
possible. So if you say
commended.
it's possible, kick me out and let me join again.
So please, if you are the one that is doing that, please, we
It's
advise you shouldn't
possible.
do that. So we advise you shouldn't do that because I don't see reason why you will be removing somebody. So please, we advise not to do that if you are the one. So efficiency, ratio of output to input, achieving a high level of output in relation to the resources put in or providing a particular level of service at reasonable input cost, output driven. So this one is discouraging. Efficiency is discouraging wastage. It's discouraging wastage at all levels. Why effectiveness? Whether output are achieved that match the effectiveness is to ascertain whether output are achieved that will match the predetermined objectives. That will match the predetermined objectives. So further explanation or broader explanation on each of the three E's. We have acquiring resources, economy, acquiring resources of appropriate quality and quantity at the lowest cost. Note that while obtaining low prices is an important consideration, it is not the only one that you have to consider. So achieving true economy will include ensuring the purchases are fit for purpose and meet any predetermined standard. Put it into consideration as well. As you are looking for a lower cost, look at will it meet up with the predetermined standard under the economy aspect. For instance, selecting the lowest quality input may lead to quality issues that compromise the level of output achievable. Efficiency, maximizing the useful outputs from a given level of resources or minimizing the input required to produce the required level of output. The key consideration is whether the resources used were put to good use and the methods and processes carried out represent best practice in such a way that will avoid wastages. And lastly, effectiveness, ensuring that the output from any given activity, either from the economy or from the efficiency, is achieving the desired result. That is the effectiveness purpose. For example, the cheapest site on which to build and run a sports center may be a disused brownfield site on the edge of town. However, if the council's objectives included reduction in car use and accessible opportunities for health improvements, Then the output of building process, the sports center, even if built economically and efficiently, will not be considered effective as it failed to meet the stated objectives. That is the end of today's discussion. Questions, questions, questions. Okay. Rabiu, Hussein.
Yes, sir.
Your
Hello.
question? We can hear you.
Hello, sir. Can you hear me?
We can hear you.
So you talk about non-for-profit organizations. I just want to know, how did they make, since they are non-for-profit organization, I just want to know, how do they make money, since every organization is after money, but their objective is not to make profit, but how do they make money, sir?
Okay. All non-profit organizations, the way of they are making money majorly is through donation. Through donation. Okay. That's the major.
So donation, is it from government?
It can be from members of the organization. It can be from individual. It can also be a support from government. And when we are talking about not-for-profit organization, it may not necessarily be purely non-profit making organization. They can be an organization set up for a specific purpose, but the profit will not be their motive. But whatever profit they achieve will now later be used to service their objectives. Will now later be used to service their objective. But the major source of their income of not-for-profit making organization. You said what? So the major source of income to not-for-profit making organization is donation. So donation can be from members of that organization, can be from individual, can be from group of people, it can also be from government.
But it's okay, sir. I get it. Thank you.
You are welcome. Kazim.
Hello, sir.
You are welcome, sir.
Hello. Can you hear me, sir? Okay, sir. Sorry, well, I'm not trying to preempt whatever you have given also. But initially, when you analyze the syllabus, sir, where you mention function, I could see the other topics that followed, but you did not bring in environment, and it is part of the ICAN syllabus. I don't know, sir.
Okay. I would like to say, I'll put it in this form.
Yes, sir.
The syllabus was given, and going by that syllabus too, they put the headings to be financial management, function, and environment. But yes, the breakdown from the syllabus, there's nothing like environment, financial environment in it. But we can still hold on when the full syllabus come in. We can still bring some other information that we might have not captured. We can still add it back.
Okay, sir. Thank you very much, sir. I appreciate that.
You are welcome. You are welcome. Any other question? Okay. Stella. She came me.
Okay, good evening, sir. Thank you for your time. How do we submit our assignments?
Okay, on the WhatsApp group, Stella, is a good question. On that WhatsApp group, send your own submission. Please, somebody's submission is not affecting another person's submission. You submit your own, I will go through it. I will go through the maximum that I can check. Then once I have gotten what I needed from majority, then I will now share my own solution. But you, on your own, when I mean you, is everybody on your own. Please always try as much as possible to make an attempt on any assignment that will be given. Oyeniyi Nathaniel. Nathaniel.
Yes, sir. Good evening, sir.
Welcome.
Yes, sir. My question is that should it be in PDF form or just written?
You mean the assignment?
Assignment.
You can write it on your notebook and snap and send on WhatsApp.
Okay, sir. So are you going to drop this note after the class?
I'm dropping that. I have promised that. I'm dropping it on the WhatsApp group. Faramade Bolaji.
Good evening, sir.
Faramade, how many Ade are you going to bring for us? So, because you have been living with Ade all this while. Oh yeah, good evening, Faramade.
Yes, sir. Please, I want to ask for the deadline of the assignment, the submission.
The submission on or before Wednesday. On or before
Okay,
close
sir.
of business, Wednesday.
All right,
Comfort.
sir.
Comfort.
Sir.
Your hand is
Can you
up.
hear me?
Yes, we can hear you now.
Okay, mine is more of an observational.
Okay.
Can I go ahead?
Go ahead.
Okay, so when we have extended classes like this, can we have short breaks in between because of assimilation, for assimilation purpose?
Okay. Because
Thank you, sir.
you finish the other one exactly 5 o'clock, right?
Yes, sir. And after 2 hours of lecture with you, after 2 hours of lecture, I found it hard concentrating.
Like 10 minute break, right?
Exactly. Yes, sir.
It's possible. It's possible. It's
That's,
possible.
thank you, sir.
You are going to even be experiencing it as we are working, as we are doing this. When we go to calculation aspects,
Yes,
I will
sir.
just give you 10 minutes. I will give you a question, 10 minutes, go and solve it and come, and we'll come back online.
That's fine, sir. Thank
All
you,
right.
sir.
You're welcome. Praise. Praise. So we are adopting the timetable for Sunday to be 5 to 8, but we can just have a little break, a few minute break, maybe 5 to 10 minute break in between. Praise. Your hand is up.
Sir. Yeah, good evening, sir.
You are welcome.
The WhatsApp group we are talking about, is it the one you sent the link to this class to?
Exactly.
No problem. Thank you, sir.
Michael.
Good evening, sir. Good evening, house.
You're welcome.
I actually have 2 questions. First, I would like to know if there is like a time when the ICAN study pack will be out, because in my time in foundation class, it helped me a lot. So I would like to get that. Then, secondly, I also heard speculations that ICAN is adopting the CVT questions. So I don't know if it can be addressed or if it can be confirmed or if it's not speculation. Thank you.
Okay. All right. The first one, the date and time, the study text will be available. We may not actually have the exact period, but we believe that before before we have the exam, we believe that it will be out. We believe, because this syllabus has been sent, has been reviewed, I think 2 to 3 months ago. And since then, they will have been working on the study material. They will have been working on that. So we believe before the middle of the diet, maybe in a month or two months time, it will be available. Then the second one on the CBT, they are still deliberating on that. And in fact, even if they are to start, and they will not start in all the levels of the examination. They may start with the foundation or the ATS. In fact, they may start with the ATS level before they will be graduating to skills and professional. And if there will be such, there will be a timely information before the adoption. Jamil.
Hey, good evening, sir.
You are welcome.
At first, I would like to appreciate your effort in today's class, and it was really informative and exciting. So please, I don't know, my own submission is about the admin. As regards the WhatsApp group, for example, it's taking too long to get response from them, and since morning, like, they promised to add me to the WhatsApp group. They only sent me this link on a private chat and still not on the WhatsApp group yet. So now I'm wondering what will happen after you drop the messages after this class, the informations are regarding this class after the class.
That
How are we
missing.
going to get it? Yes. It's taking too long. We don't get response to messages in time.
Okay. Let me apologize on behalf of the admin. Let me apologize first. And I will tell you that this will just be the period that you may experience this type of issue. Reason being that the admin, they just upgraded the application that we are using. In fact, that application now that they are trying to create for you, one, as you are making payments and you are being recognized, they are confirmed your payments, the next thing they are going to do is to connect you to the application just for you to have your login details. But the WhatsApp, I will still give the feedback for those that they are yet to put on the WhatsApp group, because that is where we usually share most of our information. So apology about that. They are going to work
Thank
on
you,
it.
sir.
You're
Thank you, sir.
welcome.
And please also consider that in before sending out those information after this class. People that are on the class that are not yet on the
we can send it multiple times. What you will just do, any moment you enter the group, on that WhatsApp group, just ask question. Tag me. You check for me on the WhatsApp group. Just tag me. Look at my name here. Maybe you will see Olatunji
Success. Yes, I can.
Success or something like that. So just tag me on that WhatsApp that you need all the relevant information that we have passed so far. That you just put it there. I'm new here. Once you type I'm new here, so I will know that I need to update any information that we have passed earlier.
I understand.
So apology about that. Love.
Good evening, sir.
Good evening, ma. You are welcome.
Thank you so much for your efforts.
You are welcome.
Yeah, my question is, this a new course. Yes, a new syllabus and a new course, and by now there is no material, and then as it is, there will be no past questions. So
there are past questions.
Okay, there are past questions on this.
Yes. Somebody asked that question maybe before we start the class. I introduced this course to us that about 50% of this particular course, about 50, even about 60% of this particular course, they brought it from SFM. Okay. They brought about 50%. Let me go back to the topic.
So you help us to send the past question, right?
Yeah, the past question is just go to SFM. Okay, go to SFM, yes. SFM at the final stage. Go and download professional Pathfinders. But before you start laying your hands on Pathfinder, you have to study the topics first before laying your hands. Then don't worry about the pathfinders as well. We will give you guides on where those questions were tested. We will give you the guide.
All right, sir.
And we'll give you the guide.
Right.
So
Thank you.
sources of finance is in SFM from here. Sources of finance, dividend policy is in SFM, cost of capital SFM, capital structure SFM, financial ratio is not in SFM, but that financial ratio you are used to it in all other business that you are doing. Business valuation and market efficiency SFM. Financial market and treasury function SFM. Foreign exchange risk SFM. Interest rate risk SFM. So even with those ones that we are certain about 100%, we can even brought all the notes directly back to this place. And there is no how that we are not still going to make reference to most of them in our topic, because there is no changes in them. Like the cost of capital, the full topic is just brought back. And I've looked at the syllabus too. All those information, we have seen them. Those ones that they are just a repeated one, they just brought them in full direct back to financial management.
Okay, thank you,
So
sir.
you are welcome. So thank you all for your time, your contribution, for your patience, and
My hand
for
is
your,
up.
you said?
My hand is up. Good evening, sir, and good evening, house.
Okay,
Can you hear me?
Lovett.
Yes,
We can
sir.
hear you, Lovett.
Okay. I want to start by apologizing that I joined late because most of my classes were postponed. So I felt maybe all the classes would be postponed. I joined so I missed 2 hours of this lecture. So now I hear about assignments. I don't know if I also had a network challenge along the line, but I don't know if I missed a part of it again, if the assignment had been shared or it will be dropped on the WhatsApp group later.
Okay.
I just wanted to be guided. Thank you.
Okay. Lovett, all you
Yes,
need
sir.
now, all you need based on
Yes,
your
sir.
explanation, just
Yes,
after
sir.
the class, the link to watch the recorded video will be shared with you all on that WhatsApp group.
Okay, sir.
So all you need is go and watch what we did today. So everything relating to the information we passed, the topic we treated, and the assignment, you have it there.
Okay, sir.
Then the assignment is also on this material, and I'm going to share this material immediately after the class too.
Oh, all right. That makes sense. Thank you so much.
You are welcome. So thank you all. See you same time next week. Good night. Have a wonderful and beautiful weekend.
Good night, sir.
Thank
Thank
you,
you,
sir.
sir.
Good night, sir.
Thank you, sir. Thank you, sir. Thank you, sir.
Thank you.
Now, wow. SFM.